Yes, people, a very, very happy to all of you. Thank you so much. So, guys, we started with a brand new topic in the last class, which was accounting for partnership firm, which is fundamentals. In other words, we started with fundamentals of partnership firm. A quick recap of what we did in the last class. We discussed that in India, if you want to do business, you need to have a form or a body in which the business can operate. If you want to do business in India, you need to have a form or a body in which the business can operate. So there are various forms or bodies that you can have to do the business, which is being suggested by Government of India. One is sole proprietorship business, where single person is an owner. Second is partnership business, where two or more people come together. Two or more people come together with the intention to do business and share profit in the business. Third is limited liability partnership. This is slightly a better version of partnership business. Fourth is you can form a company. Fifth one is HUF, Hindu Undivided Family. These are the 5 forms for doing business. Business where the intention is to earn profit. Some businesses, you do it, but the intention is not to earn profit for yourself. You want to donate the profit for a good cause. You want to give it to a charity, right? So if you are trying to do business where the profit is for non-profit motive purpose, that is doing the business for a non-profit motive purpose, in that case, the form or a body in which you can operate is either trust, society, etc. Right? Now, accounting for sole proprietorship business was something which you learned in the 11th standard. How the accounting for a sole proprietorship business is being done is being learned in the 11th standard. In 12th standard, we are going to learn how do we do accounting for partnership business and companies. In companies, I told you, we are not learning the entire accounting for companies. We are only learning the accounting for share capital part and accounting for debenture part. Only these two things we are going to learn it. Okay, not okay? Okay. Now, in the sole proprietorship business, there are certain inherent limitation. To overcome that limitation, people look up to forming partnership business. So what are the constraints I discussed in depth in the last class? Again, I will not go deep into it. So all of us know that there are certain inherent limitation or constraint in the sole proprietorship business model. And to overcome that, we form partnership business. Got it? Not got it? Got it. So what is partnership business? Partnership business is a model where two or more people come together with the intention to do business and share profit out of it. This business can be carried on by all the owners together. Let's say there are 3 owners. All the 3 of them can run the business, or any one person can run the business on behalf of the other 2 partners. About that, I'll be discussing today in depth. Then what did we learn? We learned that in partnership business, each individual person is called as partners. Each individual owner is called as a partner. The person who have entered into partnership are individually called as partners. Let's take an example where there are 3 individual people who came together with the intention to do business, and the name is A, B, C. A, B, C individually are called as owners, and individually they are called as partners. Collectively, A, B, C together are called as firm. It is called as firm. What firm? Partnership firm. Got it? Not got it? Like this, in India, how many partnership firm are there? You can't count in your fingers. That many partnership firm are there. So how do we differentiate between different firms? So for that, we have to allocate a separate name. Fortune's Fund Learning Academy is one partnership firm. Kalpavriksha Academy is another partnership firm. Astrid Events is another partnership firm. So each partnership firm is come out with a unique individual name for the purpose of better identification. And that is called as firm name. That is called as firm name. Okay, not okay? Okay. Then what did we learn? Then we discussed about the features or characteristics or elements of partnership. In that, I told you, I actually referred this point from the previous year textbook because one point they missed to capture in the current year textbook. So I took this entire point from the previous year textbook. So can I continue from there itself, this one point alone? Okay. In that point, we agreed that for you to start a partnership business, there should be a minimum of 2 people. Minimum of 2 people. 2 or more persons should come together to do the partnership business. Now, an individual person to become a partner in a partnership firm should be competent to contract. Competent to contract means what? He should be somebody who should understand how to read the partnership agreement, and when he's signing it, he should know what document he's signing into. For example, let's suppose there's one agreement, okay? I'm telling you to sign this agreement blindly. Without reading, you sign it blindly. Do you have the competency to sign the agreement? No, because you are a minor. You don't understand what is good, what is bad for you. Hence, incompetent people cannot enter into partnership. Only competent people can enter into partnership. Who says this? Which law? No. Indian Contract Act 1872 says that only people who are competent to contract can enter into contract. So, as per Indian Contract Act 1872, which three people are not competent to contract? A minor person whose age is less than 18 years cannot enter into any contract. Second, a person of unsound mind, means a person who is into a mental state of mind. He cannot enter into any contract. Third, a person who is disqualified by law. Under what circumstances law will disqualify? This is something you will study in depth in the Indian Contract Act 1872 of CA Foundation course. As of now, we are not going too much into deep. These three people cannot enter into any contract. However, Indian Partnership Act 1932 gave one exception to whom? Minor. Telling that minor, as per Indian Contract Act, you can't sign the contract. But I'm giving a special power that a minor can be added to the benefit of the partnership firm. For example, AB are two partners. These two wants to take C minor partner as a partner. Why? Because if he comes inside the business can grow. Apnina, a minor can be added to the benefit of the firm. But conditions are there. When a minor signs the contract, on his behalf, the guardian has to sign the contract, read all the terms and conditions, and he has to sign it. And by chance, if the firm is encountering any losses, that losses you can't put on the head of the minor partner. So losses will be borne only by the major partner. But if profit comes, all the partners will share in the profit sharing ratio. So including minor partner, everybody will get the share of profit. Okay, not okay. Okay. Now, once the minor becomes major, that is, he has completed 18 years of age. Last class, we saw an example that on 1 Jan 2025, a minor partner has become the major. That is, his birthday was on 1 Jan. He became major. Now, within how many months is he supposed to inform the firm that, look, I want to continue as a partner or I don't want to continue as a partner? Within how many months he has to confirm? 6 months from the date of his birthday. From his birthday takes 6 months. Within 6 months, he has to give a confirmation to the firm that, look, I want to continue. Look, I don't want to continue. Right? Now imagine up to 6 months time passed by and minor did not give any confirmation. What is the consequences? If the minor does not give any confirmation within 6 months, that will lead to deemed acceptance. What is deemed acceptance? It is implied that he has accepted to become a partner. So from 1 Jan, if I calculate 6 months, what is the due date? What is the end date? 30th June. 30 June is the last date. 30 June is the last date by which he has to confirm. If he does not confirm, from 1st July onwards, he will officially become a major partner. Now the question is, from what date is he liable to pay all the liabilities? From 1st July, or from his date of birthday, or from the day he became the minor partner? From the day he became the minor partner, from that day onwards, whatever is the liability of the business, all the liability proportionately all the partners has to share it. Got it? Not got it? Got it? Okay. Now, what is the maximum number of partners that you can have in a partnership firm? It is 50. Who gave you that limit of 50? Central government has given an upper limit of 50. So this 50, can it be changed to 60? Yes. Can it be changed to 70? Yes. Can central government increase the upper limit to 80? Yes. Can central government increase the upper limit to 100? Yes. Can central government increase the upper limit to 101? No. Up to 100, you said yes. After 100, you're saying no. Why? Because Companies Act 2013 said that is Companies Act 2013 means law. Law means parliament. They have said that, hey, you central government, the maximum number of limit that you can set is 100. Beyond 100, you don't have authority. So if you want to set the maximum limit beyond 100, in the Companies Act 2013, we have to change and give the power to central government to increase the limit to 150, 200 or 250. So in law, we have to make the changes. So can we make the changes in law just like that? No. The lawmakers has to make the necessary steps. Okay, not okay. So as of today, the central government has got the maximum limit for appointment as partners. How much it is? 100. Central government got this upper limit maximum 100 from whom? From law. Which law? Companies Act 2013. So as per Companies Act 2013, central government can have maximum of 100 people as a partner in any partnership firm. Out of that, central government as on today has notified what is the upper limit now? 50. So if you and I want to start a partnership firm, minimum 2 people. If you keep on adding more partners, the maximum partners that you can add in any firm is 50. Beyond 50, you cannot add. Am I loud and clear? You asked me one question. What is your question, ma? Oh, now the question what he asked is, can the law change and the limit of 100 what has been set to central government, can it be increased to 150 or 200? Yes. For that, in Companies Act 2013, necessary law changes has to be done. That was your question? Okay. Last class, somebody else asked me one more question. What is that? Somebody asked me one more question regarding this. I don't remember what is that question. Anyways, I don't remember what they asked. In case if online people, you remember what question you asked, you can let me know. Somebody offline while going, they asked me a question also. Who was that? You asked me a question. What is your question? No, what is that? Sir. Manadricha. Okay. Okay, chalo, no problem. Even I forgot it. It was a nice question, by the way. It was a nice question, by the way, but I forgot what is that. Okay. Till this we discussed in the last class. Correct? Till this we discussed in the last class. Now today, the next point. Can I refer the next point from our new textbook? Yes? Okay. Second point, people. Up to first point we completed last class. Now second point. Second point talks about agreement. So listen to me very carefully. You will often come across two terms, people. One is agreement. Second is registration. Listen to me very carefully. Very, very important point from the board exam perspective. It is compulsory to have agreement in the partnership firm. What is compulsory? Agreement is compulsory. I'm writing in bracket here. It is compulsory. Having an agreement is compulsory, but having registration done is not compulsory. It is optional. Now, what it is, I'll explain. Please make a note. Please make a note. Law says, Indian Partnership Act 1932 says that having agreement is compulsory. Online people, am I loud and clear to all of you? Having agreement is compulsory. 1932, having agreement is compulsory. Now, agreement can be formed or created in two ways. One is oral agreement. Second is written agreement. Oral agreement and written agreement. Do you understand what is the meaning of oral agreement? A, B, C. Three individuals came together with the intention to do business. Over the phone, they have discussed the terms and conditions. What conditions? A will give 1 lakh capital. B will give 1 lakh capital. C will give 1 lakh capital. A will do this work in the business. B will do this work in the business. C will do this work in the business. And at the end, whatever the profit comes, all of them will share the profits equally, like that they have told. So when all the terms and conditions of the partners, that is all the terms and conditions of the partnership business is agreed orally between the partners, that is called as oral agreement. That is called as oral agreement. Okay, not okay. Second oral agreement can be how we can record in the WhatsApp voice recording. We can do voice recording. So let's say three partners ABC, they have created one WhatsApp group. In that WhatsApp group, they have created one voice recording. In that voice recording, all the terms and conditions are accepted. If the agreement is created in that manner, that is called as oral agreement. Any problem? No problem. Now, second type of agreement that can be created is called as written agreement. Written agreement. Written agreement is technically called as partnership deed. It is called as partnership deed. Got it? Not got it? In exam, you don't have the liberty to write like this income. P apostrophe SHIP. This is my luxury. This is my whiteboard. I can do whatever I want to do with my whiteboard. Can you question? No. If you say, sir, this is my pen, ruled paper, I can do whatever I want to do with my paper aptina, your teacher will say, this is reading pen. I'll give you 0. I can do whatever I want to do with my red pen, she will say. So, whatever shortcuts I write here, it's my luxury. You cannot adopt any shortcuts. You will write full form PARTNERSHIP deed, partnership deed, full form you'll write it. So if partners have the terms and conditions in writing, it's called as written agreement. Technically, we call this as partnership deed. This is called as partnership deed. Now the question is to all of you, as per law, is it compulsory for us to have written agreement, or law says anything is fine? What does law say? Think and tell. Those who have completed this in your school, you must be knowing this. Partnership deed is compulsory as per law is what you're telling. Okay. Others? It's not compulsory. Okay. Now, I'll tell you what law says. Law is silent about whether the partnership terms and conditions agreement should be in writing or oral, which means as per law, whether you have the agreement in oral or in writing, they are absolutely okay. But it is recommended to have the partnership deed in writing. Why? Because tomorrow, if there is any conflict between the partners, if there is any dispute between the partners, if you drag them to the court, for court to complete this case, it becomes very faster if they have the partnership deed in writing. Because once it is in writing, nobody can lie. But if it is on the other hand, an oral agreement, imagine there is no WhatsApp audio chat record also. There's no recording also. There's an oral agreement between 3 partners ABC. What is the proof that who said what? Correct? No. Let's say ABC, all of them agreed that the profit sharing ratio is 1:1:1. Later B is saying that no sir, we did not agree like this. We agreed 1:2:1. So A and C are cheating like that. B is telling. No, to prove B's point, what is the proof? What is the evidence? There is no evidence. Such matters, if you drag in the court, no, it will take years to finish. So always, if you want, disputes to be resolved faster, it is always a better idea to write the write the terms and conditions in the writing, in the partnership deed. Okay, not okay? Okay.
So for suing also.
For suing, for any purpose, it is becoming easy. If you have anything in writing, it becomes easy. Now listen to me very carefully. Sir, how does this partnership deed looks like? The partnership deed looks like this. This is called as stamp paper. What is it called as? Stamp paper. You go wherever, any nook and corner of the country. If any contract people enter into, normally they enter into a stamp paper. The stamp paper could be ranging from 10 rupee paper, 20 rupee paper. Can you see here? Here it is 500 rupee paper. It can be even 10 rupee paper, 20 rupee paper, 50 rupee stamp paper, 100 rupee, 500, 1000, 10,000, 1 lakh, 2 lakh, 5 lakh. So this 500 means what? When you go to a stamp vendor to buy the stamp paper, so stamp vendor sells this stamp paper. Stamp vendor will sell this stamp paper. That stamp vendor is an agent of the government. We are staying in Tamil Nadu. So stamp vendor is a representative of the Tamil Nadu government. So this 500 rupees you have to pay to the stamp vendor, which in return goes to the respective government, respective local government. Got it, not got it? So when you study the civil law, in that you'll understand that for which type of contract, how much worth of stamp paper we have to take it. Got it? So if you're buying land, accordingly the stamp value will change. How the calculation needs to be done, all that you will learn when you go in the higher studies. As of now, I'm telling that for any contract you do it on a stamp paper, and this stamp paper will come with some amount. Means 500 rupees stamp paper means I will pay 500 rupees to the stamp vendor. If this is 50,000 ka stamp paper means I'll have to pay 50,000 to the stamp vendor. Got it, not got it? Now, in many places, they try to make this very digital. Digital means what? Now, no longer have to pay this money to the stamp vendor. All the payment will be done online to the government. All this will be done online to the government. Got it, not got it? So, when I was doing my CA practice, I used to get a lot of client requesting that, sir, please help me to draft a partnership deed. So we used to draft the partnership deed on this stamp paper. I literally have typed at least some 20, 30 partnership deed for my clients. I've created the partnership deed for my clients on the stamp paper. So we do the printing work and we get it signed from the client. Because CA or a CS who knows legal, they know how to create this document in a very careful manner. Now, if you have a partnership in writing, this is how it will look like. This is how it will look like. In some time, I'll try to read the contents of partnership deed. If you come back here, in page number 4, there's a content of partnership deed. So I'll be discussing this about this a little bit more in detail. So all I'm trying to tell is that this, if you have partnership in writing, this is called as partnership deed. So if you want to know, sir, how does a partnership deed looks like? This is how a partnership deed looks like. So let's suppose any of your parents are into partnership business, right? You can ask them to show the partnership deed. If they show the partnership deed, it will more or less look like this only. Got it? Not got it? This is how a written partnership deed looks like. If this is clear, can I go forward? Now listen to me very carefully. Having an agreement is compulsory, but registration of the same with the government is optional. What is the meaning of registration? What is the meaning of registration?
So registering our company is a partnership legally in the according to the partnership company.
Okay. More or less, I'll just tell you more detailed manner. All of you know that people buy and sell land. I'm sure all of your parents also will be into buying and selling land. At some point of the time or the other, your parents might have purchased land or sold land. Now, for buying and selling land, two things are required. One is sale agreement. This is an agreement where we document that this buyer is selling the property to the seller. Buyer ka details, seller ka details. Buyer is selling this property to the seller for so and so rupees, like that. There'll be a sale agreement. Now, buyer will sign this, seller will sign this. If you think that with this the land transaction is over, then you are wrong. Our law says that apart from executing a sale agreement between buyer and the seller, you need to register this document. You need to register this document with the local government. If you are doing this transaction in Tamil Nadu, then this sale agreement needs to be registered with Tamil Nadu government. If you're buying and selling land in Gujarat, then after you execute a sale agreement, you need to register that document with the Gujarat government. If this transaction is taking place in Maharashtra, then once you execute a sale deed or sale agreement in Maharashtra, that agreement you have to register with the Maharashtra government. And while you do so, you will pay a stamp duty fee for the purpose of registration to the government. Why? Because if you don't register this property with the government, no, tomorrow a lot of litigation issues will come, a lot of problem will come. To avoid all that and to overcome all that, registration process is made mandatory. Registration process is being made mandatory. So you have to pay a stamp duty fee to the government. Now here, in partnership business, when you create an agreement, registration of this agreement with the local authority is not compulsory. It is a choice. If you do so, you will be beneficial. What is the benefit? Tomorrow, if you go have any litigation or dispute, you drag this matter to the court, the resolution of this issue will be more faster because this is a registered document. It is a registered document. Now, often people confuse that if I have a partnership agreement in the stamp paper, this itself means registration. If you think you're wrong. For example, can you see on the screen, this is a partnership deed on a stamp paper. Whether this is registered or not registered. This is not registered. This is not registered. Registration is a different process where you will have a stamp, not this stamp or seal. For registration, separate seal has been punched at the end of the document telling that this has been registered with the local government. Right? And that registration is getting completed only when you pay the required stamp duty fees to the local government. Okay, not okay. Now, everybody will not have a mindset to do the registration because this involves cost. You have to pay the money to the lawyer, agent, broker is there, stamp duty fees has to be paid. So it is a lump sum amount to be paid. Everybody is not comfortable. So therefore, small business people, feels discomfort with this registration procedure. Hence, in the Act, Indian Partnership Act 1932, they said that registration process is not compulsory, not compulsory, not compulsory. However, we'll study second volume, companies. Companies cannot be created without registration. When you create companies, even for that matter, LLP, Companies and LLP, if you want to create, no, without registration, you cannot create only. But for LLP, they didn't want to bring too much complication. They said, even one agreement on stamp paper, you can start the partnership business. Registration not compulsory, because we wanted ease of business in India. So therefore, they said that why to complicate? Because so many people start partnership business. So if we complicate them, no, you have to do registration. It's a burden on the business people. So we said that let's give some relaxations. Let us not impose any registration on the partnership business. So partnership deed, you can have it in writing on the stamp paper. If yes, this is called as partnership deed. But registering this with the local government authority is not compulsory. So having agreement is compulsory. Registration is not compulsory. Having agreement is compulsory. Registration is not compulsory. If you allow me half an hour more, I can tell you the benefits of registration. But if I tell that, it becomes more of a CA class. So I don't want to get into that. I want to restrict my discussion only with regard to your 12th CBSE, not beyond that. Am I loud and clear? Fantastic. Now, partnership comes into existence by an agreement. So no agreement, no partnership. Agreement is there means partnership is there. But the question is whether the agreement should be in oral or in writing, or both is possible. Both is possible. Partnership comes into existence by an agreement which may be written or oral, which can be either in oral or in writing. A written agreement is termed as partnership deed. The terms and conditions of the agreement among the partners is the basis of their relationship. Means what? Whatever are the terms and conditions in the partnership deed, no? 1, 2, 3, multiple points are mentioned. Based on this, the relationship between one partner and another partner is being established, is what they're trying to say. Okay, not okay. The terms and conditions of the agreement among the partner is the basis for the relationship. Now, how A and B is related to one another? They are related to one another as per the terms and conditions mentioned in the partnership agreement. Got it, not got it? A and B are called as partners. Who says that? Partnership deed says that. Since partnership deed says that they are partner, then they are partner. That is how the relationship is coming. Otherwise, they are not related to each other. I and my brother are related because we are born from one single, right? Correct? No, mother, common mother. So by virtue of that nature, we share the relationship of brother and sister. So you and I, we share a relationship of student and teacher. Like that, A and B are called as partners. What is the underlying document who says these both are partners? The terms and condition that is laid down in the agreement, that is the basis of their relationship. Got it, not got it? Okay. Now, very, very important point. Partnership business is there now. It may be for a venture or for a period or at will. It's only one line, but it's a very powerful line. Okay, now tell me one thing. There's one word called as may, and there is one word called as shall. Can you tell me the difference between the both? What is the meaning of may and shall? What is the difference between may and shall? May means what? Shall means what? Yes. May is permission, okay? No. May means optional. Wherever in law, if they use the word may means you may do it, you may not do it. You can do it or you need not do it. So may means always it is optional. When they use the word shall means you have to do it, it is compulsory. Shall means compulsory. Shall means compulsory. You shall come at 6:30 p.m. means you have to come by 6:30 p.m. You don't have a choice. If I tell you, you may come at 6:30 means what? You can come at 6:30 or 6 o'clock or 7 o'clock or 8 o'clock. Means you have a choice. So may is optional. Shall means compulsory. Okay, not okay. Here, what are they using the word? Partnership may be for a venture. Means it can be either be for a venture or for a period, or it can be at will. Now listen to me very carefully. So what does this mean? Now, guys, I have a land. How much? 1 acre. Where? In RS Puram. Like that, you imagine. I don't have it. Imagine 1 acre land in RS Puram. My intention is to construct 300 apartment on this 1 acre of land. I want to do one joint venture business. I want to do a partnership business with all of you. I have a land. I'm looking forward for somebody to come as a partner, as a joint owner, who can invest money for construction of building, and some partners who can take the lead for the construction of the apartment. How many of you are willing? Raise your hands. How many of you are willing? Raise. காசா பணமா காசு கேட்கிறேன்னா எக்ஸாம்பிள் தான் கேட்கிறேன், உண்மையெல்லாம் கேட்கல நான். ஆ 1 2 3 4 5 6 7 8 9 10 11. Okay, 11 people so far. Let's say 20 people together, we have decided, 20 people you have decided to do a partnership business. What is the partnership business model? Pratik sir will contribute land. Remaining 19 people will contribute money for the purpose of constructing this 300 apartment. And now, please tell me, what is the objective of this particular partnership? After construction, the final objective is to sell all this 300 apartment, to sell all this 300 apartment. Now, when you are creating a partnership agreement, you have to tell that this partnership business will be valid for how many years? Like that, you have to quote it. Now, our motive is what? To do this business. What is the business? Constructing apartment and selling apartment. Imagine the last apartment unit, 300 apartment, if it is sold, is there any need for us to continue this business? Unless until we invest this money in some other land and we desire to do this, business on regular basis, then we may continue, for a long period. But as of today, I have no intention, nor you have intention to continue the business any forward. Apana, this business, this partnership business will prolong for what long period? Up until this 300 apartment is being sold, which means this partnership is for a particular venture. What is a venture? Contributing land, constructing apartment, selling apartment. This is a venture. Venture begins with contribution of land, construction of land, and ends with selling of the apartment. Once all the apartments are sold, you and I have no intention to continue the business. Hence, we say that this partnership business is for a particular venture. Particular venture. Okay, not okay. Now, why are we discussing this? Is because very soon I'll be discussing with you what is contents of partnership deed. Adavadhu, when you create this agreement, what and all points you have to mention in this agreement, we will discuss. In that point, you are supposed to mention here, description is given. Description, principal, nature of business, commencement, capital, interest on capital, interest on drawing, profit sharing, interest, loan, remuneration, valuation, goodwill. Here, point number, what is this called as? 19, This is 19. Duration of partnership. This period of partnership, whether it is for a specific period or for a venture or for a will. What is our condition? Is it for a specific period? Are we going to do this business for 5 years or 6 years? No. It's for a particular venture. This venture, how many years it will take? Do we know it? Constructing this apartment and selling apartment will take 3 years, 4 years, 5 years, 6 years. We don't know. So in that case, when we are not sure about this business being lasting for how many years, then the option what we'll opt is this particular partnership is for a particular venture. Means what? As long as my 300 unit of apartment is being sold, that day my venture is accomplished. After that, I will close this partnership business. Got it? Not got it? So duration of partnership is for a particular venture. Now this is one example. Second example is that in this particular clause, you're supposed to mention this partnership business will be valid for how many years, whether it is for a specified period or not. For example, A, B, C were 3 people who came together with the intention to do business. They want to do business. Now, when we asked ABC, for how long do you want to continue this business? They said that we want to do business together for 5 years. We are now in which financial year? Imagine this is 1/4/26. They are starting the business on 1/4/26 plus 5 years. So please tell me, what is the 5th year end? 26/27, 27/28, 28/29, 29/30, 30/31. 31st March 2031. is the 5th year end of this firm. And now, after this 5 years, the business will get closed. The business will get closed. Got it? Not got it? Now, why this is because these 5 partners were not sure that this business will run for how many periods. So they said 5 years. Sir, in the 5th year, if ABC wants to further continue business, then what are we supposed to do? In that case, they have to change this clause. And from 5 years, they have to increase it to 6 years, 7 years, or 8 years. Sir, if I don't want to mention years, I want to close this business when I feel like apdina. In that case, the option that you have to opt is this partnership is at will. At will means what? I will close this business when I want to close the business. That is called as partnership at will. At our will and desire, we will close the business. So the duration of the partnership either can be at will. If not will, it can be for a particular venture. If not for a particular venture, it will be for a particular period. Okay, not okay. That is what they're trying to state here. In the agreement, it is compulsory for you to mention what is the duration of partnership. Is it for a particular venture, or is it for a particular period, or is it on your will? Now, 99% in all the partnership deal, in the duration of partnership clause, they will choose this option at will only. It is very rare that people will go for period or venture. Got it? Not got it? Okay. Next, partnership at will means partners may retire from the partnership if he or she so desires by giving a notice to the other partners. Correct? No? A, B, C are 3 partners. After 2 years, 3 years, C says that no, I want to quit the business. He will give notice to other partners that he is desiring to quit the business. He can quit and go home. Any objections? No. This is called as partnership at will. Means any partner at any point of time give a notice to other partner of his intention to retire from the business. Got it? Not got it? Okay. Till this, do you have any doubts? What are we trying to discuss? We're trying to discuss the characteristics, features, or elements of partnership. From here, you can get 2 type of question. One, direct question. Direct question for 2 marks or 3 marks. Name certain characteristics or elements or features of partnership. You may get that. Or you can get MCQ question based on this. What can you get? MCQ question based on this. Any doubt so far? Online people, any doubt so far? Now, partnership business should be for a particular business. It should be for business. Now, what does it mean? The agreement that you create should be for doing a business. Now, let's say A, B, C, 3 partners decided to come together to do smuggling. You know what is smuggling? What is smuggling? In Dubai, from Dubai, we are smuggling gold. What does it mean? Illegally, they are bringing the gold inside the country and selling it. Ab business done.
No, sir.
Smuggling is not legal in India. So when we are talking about business here, no, we are talking about 2 things. Business to be done, which should be legal, and business to be done with the intention to make profit. These are the 2 points that has been emphasized in this particular point. நீ பார்ட்னர்ஷிப் பண்றதா இருந்தா அது லீகல் பிசினஸ்க்காக வேண்டி இருக்கணும், அல்லது ப்ராஃபிட் சம்பாதிக்கக்கூடிய வேண்டிய விதம் இருக்கணும். யூ கேன் நாட் டூ partnership for charity. Sir, ABC, 3 of us are coming together with the intention to, do business and earn charity. Means what? Whatever the profit is earned, we'll give for charity purpose. Apdina, boss, you cannot create partnership business. For that, you have to create either trust or society. So if you are creating partnership apdina, the intention should be what? To make profit in a legal way. Got it? Not got it? So here, agreement should be to do business. An agreement should be to do business, and business includes trade, vocation, and profession. As a result, a joint ownership in the property held not for sale or a clinic set up as a charitable clinic is not a business. Now, listen to me very carefully. This is a new point that is added in the current year. They are telling that a partnership agreement has been created for what purpose? Joint ownership of the property, and this is held not for sale. Means what? All of us together, we entered into one agreement. Agreement is what? To buy land. To buy land and do what? Either you have to sell it or construct an apartment on that and sell the apartment. Neither we are selling land nor we are constructing apartment. The land is held for the purpose of not sale. Upon we are going to use this for our own purpose. We are going to use this for our own purpose. For this reason, can you start a partnership business? Can you draft a partnership agreement? No, it is not allowed. Partnership apnina, partnership deed or agreement should result into doing of some business. You cannot choose not to do business. Got it, not got it. So doing business is mandatory. You know what is business? Buying and selling business. Giving services and getting money against it or in return of that is business. So you have to do business is what they're trying to say. Or a clinic set up as a charitable purpose. So we formed a partnership business that will construct a hospital, and in that we'll do free treatment for the people. So for that purpose, can we create a partnership business? The answer is no. For that, if I have to create, then I have to create a trust or a society. As a result, a joint ownership in a property held not for sale or a clinical setup for charitable purpose is not a business, and therefore it should not have a partnership deed. A business should be lawful, since unlawful activity cannot be carried out in the country. Okay, not okay. So this business talks about 2 points. The business what you do should be legal and not illegal. And second, the business what you're trying to do, you have to reap profit out of it. There should be some business transaction and not charitable transaction. And that business transaction should lead to either profit or losses. Got it, not got it. That profit and loss owners should enjoy. You cannot give it as a charity. Apdi pandra apdina, then you can't create a partnership business. Got it, not got it. Online people, got it, not got it.
Got it, sir. Got it.
Now, fourth point, I'll do it later. Coming to fifth point. Fifth point, sharing of profit. Profit and losses are shared by the partners. Profit and losses are shared by partners. What are they trying to say? Profit and loss of the business are shared by partners in agreed ratio. Correct, no? When the partners come together to do business, what will they say? Epa, let's agree the partnership ka profit sharing ratio. So let's say A, B, C are 3 partners. They'll agree in the partnership document that the profit sharing ratio should be equal. Means what? 1:1. Or it can be 2:3:1. Got it, not got it. So the profit and loss of the business are shared by the partners in an agreed ratio. This ratio should be agreed in the partnership deed. In the absence of partnership deed, or when partnership deed does not have a clause for profit sharing ratio, it will be shared equally by all the partners. Now listen to me very carefully. When we discuss the contents of partnership deed, there's a particular point here. Point number 9. Can somebody read for me? Profit sharing ratio means what? You have to mention here a particular ratio in which the partners will share the profit and loss. They want ratio, not percentage. Now, for example, A, B, C are 3 partners. They want to share the profits in a particular ratio. That ratio has to be agreed, is what they're trying to say. It can be anything. It can be equal. If it is equal, means what will you take it as? 1:1. So what does this mean? This means that if 3 rupees the profit, each one will get 1, 1, 1. Got it, not got it. Got it, not got it. Now, imagine if the profit earned is 12 rupee, how much will each one of them get? How do you get that 4, 4, 4? Now listen to me very carefully. We will apply one technique here called as VV technique, vegetable vendor technique. What does the technique says? Two kg tomato in a rate ba 100. Oh my god, is rupees 100. If 2 kg of tomato is equal to 100 rupees, then for 3 kg tomato, how much?
1.3.
So what will you do? Cross multiplication method. This you have studied in which standard? Second standard? Oh my god, you remember that much? இல்ல தூ சும்மா அடிச்சு விட்ட என்ன சார் சாருக்கு தெரியவா போகுது நாங்க செகண்ட் சொன்ன அவர் போய் செக் பண்ண போறாரு அவர்ட்டு third, fourth, fifth, wherever you studied. So what does how does this work? 3 into 100 by 2. So 100 rupees divided by 2 kg if I do, I'll get cost for 1 kg. If I multiply with 3 kg, I'll get 150. Correct? No? I'm telling you 99.99% formula that you come across in accountancy subject. 99.99% formula that you come across accountancy subject is created out of this technique only. In ratios, I told you, there are 100 formulas. Do you think it is human beingly possible to remember all the 100 formulas? No. So we will derive the formula using vegetable vendor technique. So same technique I'll apply here. Listen to me very carefully. When 3 rupee was the profit, how much did partner A get it? When 3 rupee was the profit, how much did partner A get it? 1. Therefore, now when it is 12 rupee of profit, how much will he get it? Cross multiply. Will get this. What is it? 12 into 1 by 3. How much it is? 4 rupees. Got it, not got it? Any big difficulty in this? If I ask you to calculate the profit of each partners, is it any difficulty for you? No. Now, this partnership profit sharing ratio should be agreed in the partnership deed. But sometimes what happens, when you are drafting the partnership deed, by mistakenly, you forgot to write the profit sharing ratio. Profit sharing ratio is not captured in the partnership deed. Tell me people, in future, if dispute happens, dispute will happen or not happen? It will happen. How will you resolve this conflict? How will you resolve this conflict? So law said that if the absence of partnership deed, when partnership deed is not there or partnership deed is there, but in that you forgot to have the profit sharing ratio, law says that profits will be shared equally. Got it, not got it? Now listen to very carefully. ABC are 3 partners. They agreed the profit sharing ratio to be 2:2:1. Oral agreement. No documentation anywhere. No voice chat. Nothing. No written agreement. Now, later after 3 years, or let's say in the first year itself, there is a dispute where partner C says that no, I never agreed to this. I said 1:1:1 only. You guys have misunderstood as 2:2:1, like that. Between C versus A, B, there is a fighting. Can I say fighting is there or not there? Very much possible. So if these people fight it from here, where will they go to? Court. Now for court, to take favor of C or A, B, there should be some proof, no? So where will the court take the stance? There's nothing. So now court will refer Partnership Act 1932, in which it says that if the partnership deed in writing is not there, or partnership deed is there, but in that they forgot to record the clause with regard to profit sharing ratio, profits will be shared equally is what Act says. Court will immediately dismiss the case, telling that nothing doing. If you have not agreed, no, then forget this. This only will be applied. So who is at loss now? A and B are loss. If that is not supposed to happen, Apnina, A and B should be smart enough to understand that in agreement, better you capture this point, or else later you'll be in trouble. Okay, not okay. This is what this point is trying to say. In the absence of partnership deed, this partnership deed is not there in writing, or partnership deed is there, but in that they have not written the clause about the profit sharing ratio. In that case, the Indian Partnership Act 1932 says that profits will be shared equally by all the partners. This is one of the favorite question of the board examiner. Very, 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 very important. It is so provided in the Indian Partnership Act 1932. Profits to be shared equally. Who gave it? Indian Partnership Act 1932 has given it. Now the term profit includes both profit earned and loss incurred. Now the question what is coming is, ABC are 3 partners. They agreed the profit sharing ratio to be 1:1:1. But in the first year of business, they had a loss of 30,000 rupees. Now what is a loss sharing ratio? Should we have something different? No. Whatever is the profit sharing ratio, that itself is the loss sharing ratio. So the ratio ka name is what? Profit or loss sharing ratio. So profit ka ratio is 1:1 means loss ka ratio also is 1:1 only. If you want to have a loss ratio separate, then in that profit sharing ratio clause, you have to mention that in this business, if loss is happening, losses will be shared in this ratio, profit in this ratio. Like that, you should have mentioned the clause and all the partners should have signed it. If you have not agreed to this contrary, in that case, profits and losses both will be shared in the same ratio. Okay, not okay. Around you want, now I'm repeating the point on the request of the student. A, B, C are 3 partners. Okay. Profit sharing ratios agreed is 1:1. Means if profit sharing ratio 1:1 apdina, loss also will be 1:1 only. But if C says no, I want the loss ratio to be different. I want the loss ratio should be 2:2:1 apdina. in the partnership deed, in clause number 9, you should mention this is profit sharing ratio, this is loss sharing ratio. Apni mentioned panite. If all of them sign it, then profit sharing ratio can be different, loss sharing ratio can be different. But if you don't have a different ratio apnina, then profit ratio and loss ratio both are same. Both are same. Okay, not okay? No. Now comes very important point. Liability of the partners. Very important from examination point of view. This is also one of the favorite question of the board examiner. Liability of a partners in the partnership business is unlimited. This is one of the biggest drawback of the partnership business. This is one of the biggest constraint in the partnership business, right? Because of which people run away from partnership and go to either LLP or companies. So if I ask you, what is the liability of a partner in a partnership firm? What will you say? This unlimited liability. Unlimited liability. What I want to know from you is, what is unlimited liability? What is unlimited liability? Very good. Perfect. You got it. Now let me explain. Super. This is balance sheet of the firm. Okay, there is a firm. This is the balance sheet of a firm. This firm is between X, Y, Z, whose profit sharing ratio is 1:1:1. In the balance sheet, total assets is 30 lakhs. Capital contributed by XYZ, all three of them put together, is 10 lakhs. Apart from this, they have taken a bank loan of 20 lakh. Can you please tell me what is the total of the liability side? Shanku, what is the total of liability side? 30 lakhs. What is the total of asset side? 30 lakh. Is the balance sheet tallying? Yes. So tell me one thing. 5 years of business over. Now, ABC wants to close the business. Correct? When you close the business, dissolve the business, what will you do? You will sell all the assets. Yes or no? So business illa appadina, whatever land, building, plant, machinery, whatever you have, you will sell or not? From debtor, you will recover money or not? So all the assets will be in cash. Yes or no? Now my question to all of you, your balance sheet says that your total assets are worth 30 lakh. Your balance sheet is screaming and telling, my assets are worth 30 lakh, 30 lakh, 30 lakh. Your balance sheet is screaming and saying. But in reality, if you go and sell this assets in market, will you get exact 30 lakh? Or you can get more than that or less than that also. Yes. So balance sheet says asset is 30 lakh. But in reality, when you go and recover all the assets, no, you may get exact 30 lakhs. You may get more than 30 lakh, which is 50 lakhs. Or you may get less than 30 lakh, which is 5 lakhs. Imagine a scenario, 30 lakh worth of asset, when you went to the market for selling purpose, had fetched you only 5 lakh rupees. Your heart will bleed or not? Very much it will bleed. So imagine a scenario where 30 lakh worth of asset is able to recover only 5 lakh. You sold all 30 lakh worth of asset. How much cash have you got it now? Only 5 lakh. With this 5 lakh, what will you do? With this 5 lakh, what will you do? You have to settle the bank loan and partners capital. Whom will you give the money first? Owner. Who said owner? Somebody said owner. Owner. Somebody said owner. I want to know the gentleman who said that owner. Harsha. Without that person, I will not go. Without knowing that person, I will not step forward. Who said owner? Honestly admit it. I'll give a chocolate to you. Nice chocolate I'll give. Who said owner? I want to know. Or else I'm not proceeding forward. Who said owner? Summa, solunga, it's okay. It's fun only, tell who said owner. Kaun bola? Supreeta. Harsh bola? ठीक है. Okay, let's say Harsh, let's imagine Harsh said, my dear Harsh, you will go to bank and get a bank loan. In the 5 lakh rupees, I want to settle பண்ணாம உன் வீட்டுக்கு நீ எடுத்துட்டு போயிடுவேன். How is that possible? You can't do it. We'll study the 7th chapter of partnership, which is called as dissolution. In the dissolution topic, we'll study that your Indian partnership in 1932 is given an order to whom you have to make the payment. This is there very, very well within your syllabus. In the dissolution chapter, your law has given you the order in which you have to make the payment. as per law, you always have to make the payment to the external people first. Got it? Not got it? If the money is left over, apnina, as the owner, you can take the money. You can't take the money first. You have to settle the money to the banker first. Got it? Not got it? But I have a problem here. What is the problem? Bank loan that I have to settle is 20 lakh. But the money what I have in the business, in the firm is only 5 lakh. So let's say full 5 lakh I repaid. How much balance I have to repay? 15 lakh balance we have to repay. Who's crying here? First banker will cry. He will weep the entire night. Next day morning he'll, what will he do, you know? He will go and attack the private assets of the partner. Attacking doesn't mean that he will take a sickle knife and keep attacking. Attacking here means he will legally send a notice to all the three partners that you donkey fellow, you monkey fellow, you buffalo, you took 20 lakh loan, repaid only 5 lakh out of the 20 lakh rupees, 15 lakh you have not repaid. No, you cannot escape. We will come and seize your private asset and recover money from the private asset. So now I am taking you to the balance sheet of A, personal balance sheet of A. A dana partner. No, XYZ. Sorry. I am taking you to the personal balance sheet of X. So let's suppose here there is one property worth 5 lakh rupees apnina. We will sell this property. We means who? Bank. Banker will go and take over the control of the property, not directly, through court. Through court, he will go and take over the control of the property, sell and recover his money. Which means, when I say the partners are having unlimited liability means, which means there is the risk of their personal assets getting exposed to the liability of the business. That is called as unlimited liability. What is unlimited liability? When the liability of the firm is not repaid by the assets of the firm, in that case, such liability holders can attack the personal assets of the partner. This is called as unlimited liability. Got it? Not got it? This is one of the biggest disadvantage of partnership firm. All those business people who do not like this point, they will never ever form partnership business. Never. They will either go for LLP. What is the full form of LLP? Limited liability partnership. Oh, or you will form companies. You will form companies where the liability is limited. Means what? If this was not the balance sheet of a firm, had this been a balance sheet of LLP or a company, in that case, banker will confirm cry. Why? Because out of 20 lakh, if the LLP or company is paying 5 lakh apnina, if balance 15 lakh is unpaid means you cannot attack the private assets of the LLP partner or a shareholder of the company. You cannot attack. Got it? Not got it? But if you are creating a partnership firm apnina, this is very important for all of you also. Tomorrow you will do business. In partnership, if you do business apnina, you need to know this. By chance, if your partnership business is not able to pay the liabilities means, then those liability holders will attack your private assets. Got it? Not got it? So in our example, 15 lakh rupees is the total pending liability. Will all this 15 lakh be paid by only X or Y or Z? No. It has to be paid. It has to be paid as per the rules and regulations. This you will study in the CA foundation level. When you come to the dissolution topic, we will apply the rule which has been laid down. In the CA foundation, I'll be discussing in depth. In 12th standard level, you have a simple dissolution topic. This concept is not there in your CBSE level, but it is there in your CA foundation level. Yes, boss. Gone. So he's asking, sir, in case if this is LLP or partnership business apnina, how will banker recover the money? Banker cannot recover the money. So banker will try its level best through court to recover money. But when there is a limited liability clause apnina, you cannot recover it. But when you come to CA foundation, especially when you study a subject called as law, there's a concept called as lifting of corporate veil. So when you understand that concept, you'll understand how the recovery is happening. In case of LLP and in case of companies, banker can still recover only under one circumstances, which is the lifting of corporate veil. Under circumstances, recover panna mudiyum. But what is that circumstances to know that you have to come to CA foundation law class? Okay, not okay? Okay. Liability of a partner in partnership firm is unlimited. Means personal assets of the partners can be exposed if such liability is not paid by the firm. It means the partners are liable for firm's debt. Look at the language. It means partners in the personal capacity are liable for firm's debt individually and jointly with other partners. Net personal assets. Now, this point I don't want to explain now. Why? Because when I discuss dissolution with you, we have in-depth discussion about this. We have in-depth discussion about this. This is a wrong place to discuss this point. Got it? Not got it? There is one adjustment that the personal assets. Now, okay, chalo, I'll take 2 seconds of time to explain. Please tell me, what is the total bank loan? 20 lakh. In that firm paid how much? 5 lakh. Balance is how much? 15 lakh. Each will pay how much from their personal assets? 5 lakh, 5 lakh, 5 lakh. X will pay 5 lakh from his personal assets. Y 5 lakh and Z 5 lakh. Now, let's suppose the property here is worth 6 lakh rupees. Okay, wow. Now, this property is taken on a loan. There is a personal bank loan. PBL means personal bank loan of 1 lakh rupees. Purida. Which means this loan is given for this property. Now the question is, banker wants, let's say, 5 lakh means, can he sell this 6 lakh and keep it with him? No. Or let me make this 5 lakh itself. Property is worth 5 lakh rupees. Can the banker come and take full 5 lakh rupees, Shankesh? No. From your personal asset, you have to minus personal debt. How much is my personal asset? 5 lakh. In that you set aside money for personal debt. Why? Because this bank loan will start crying, no? If this entire 5 lakh is being taken by that banker, then this banker will start crying. Got it? Not got it? Therefore, from the personal assets, you're supposed to minus the personal debt. What is the balance money available? 4 lakh rupees is what we can recover from the property of X. Sir, what about the remaining 1 lakh? Remaining 1 lakh will try to recover from X. If we cannot recover from X, we'll try to recover from Y and Z. Got it? Not got it? This is what they're trying to say here.
How will you choose?
One second, ma'am. This is what the point they're trying to say, that whenever you take the partner's asset, you will not take the gross asset. You will take the net personal asset. What is the meaning of net personal asset? From the total personal assets of the partner, you will minus the personal debt, and the balance is called as net personal asset, which can be used to pay the firm's debt if the firm asset is not adequate to meet the firm's debt. What is firm's asset? 5 lakh. What is firm's debt? 20 lakh. So how much is inadequate? 15 lakh. So when this 15 lakh is not adequate to meet firm's debt, then you can attack the personal assets of the partner. Which asset? Gross asset or net asset? Net asset. 5 lakh is the gross asset. But from this gross asset, if I minus the personal debt, I'll get 4 lakh as net asset. This 4 lakh is called as net assets. Got it? Not got it? What is your doubt? Somebody asked me.
How do you select if you want to take from X, Y?
No, the question what he's asking is, so how will I know that how much money should I recover from X, Y, and Z? Please understand, 15 lakh is the balance money. We will try to recover this in the profit sharing ratio. So what is the profit sharing ratio? 1:1:1. So equal means what? 5 lakh, 5 lakh, 5 lakh. But this is not that simple. It has got a lot of complications, which we'll be discussing in CA foundation level, not at 12 CBSE level. There are multiple scenarios in this. What if X becomes bankrupt? He does not have sufficient money. Then will you recover that money from Y and Z or not? Will Y and Z give or not? Like that, we have a lot of complications, which I'll be discussing in CA foundation, because we have questions based on that. But in 12th standard, we have no questions like that. So I will not discuss upon that. Yes, boss.
Like, all the three are not able to pay the total.
He is telling, sir, what if all the three are bankrupt? Bankrupt தான். ஓ, இவன் எப்படின்னா எங்கிட்ட ப்ராப்பர்ட்டி இருக்கு, ஆனா நான் கொடுக்க மாட்டேன் அப்படின்னு நீ சொல்ற நினைச்சியா? அவன் விட்டுருவானா? If you have money, they'll recover. Now the question what you should ask is, if all the three are bankrupt, then what to do? I will again apply the concept in CA foundation level, not in 12th standard level. We'll apply Gardner versus Murray rule, not here. இப்போ அதெல்லாம் சொன்னா CA class ஆயிடும். வேணுமா CA? நான் ரெடி, நீங்க ரெடியா? வேண்டாம். We will discuss what is applicable for 12th standard level. Let's not complicate our life. Now I have one more point to add. Now this point, unfortunately, they have not mentioned in your partnership topic, but the very same point they have covered in the Companies Act 2013 ka second volume. When I do TSG ka second volume, no, there's a tabular column differentiating between what is partnership firm and companies. In that they have mentioned one point. You know what is that point? The point is, The liability of a partners in a partnership firm is unlimited. This is there in the book. But what they missed here is all the partners are jointly and severally liable for this liability. This they have not mentioned it. Where have they mentioned this? In second volume of T.S. Grewal, in a tabular column, they have mentioned this point. Okay, not okay. You have to make a note of this point. Very, very important. In one of the board examination, I don't remember which year exactly, they've asked this question. What is the liability of a partners in a partnership firm? You have to write both of these points. The liability of a partners in a partnership firm is unlimited, and all the partners are jointly or severally liable. All the partners are jointly and severally liable. Please make a note. This document is called as notes, which I'll give it to all of you. In this document, all the important points I'll try to capture. All the important points, journal entry ka format, assumptions, wherever we have to take, everything I'll capture and give it. So this will be very, very handy when I do revisions to all of you. I mean, when you do revisions for board exam, this notes will be very, very useful and handy. Have you all made a note of this? Now we have to understand what is the meaning of this. Here, they have lightly mentioned it, but not properly. Look at the language. Liability of partners are unlimited. It means the partners are liable for the firm's debt individually and jointly. Individually means what? Severally. Now listen to me very carefully. Listen to me very carefully. I'm giving examples. A, B, C are three partners in a partnership firm. In that, partner C approached bank to take a loan of 20 lakh rupees for the firm. He's not taken the loan for his personal purpose. He has taken the loan for business purpose. Who has taken the loan? C. C is one of the partner. He went to the banker and asked for a loan, and bank gave it. Can bank say, no, all three of you come, then sign an agreement, then only I'll give a loan? Can you say that? No. If even one owner goes and asks for it up till now, with proper documentation, they will give the loan. Now, between C, that is between the firm and the bank, there will be one agreement. In that agreement, if they don't mention who will repay the loan, who will repay the loan, like that, if there is nothing mentioned up till now, all the three partners are jointly liable to repay the money. Yes or no? C is the person who has taken the loan for the firm on behalf of the firm. Does it mean that only C will pay the money? Imagine you guys are C. You are taking loan for whom? For your personal self. Huh? Did you take loan for your own self? No. You took it for the business. This 20 lakh rupees has been deployed in the business. So when the banker is asking for repayment, if I recover money from C, will it be okay? If I recover money from only you, is it okay? What will you say? This 20 lakh rupees I took for myself. Huh? No, I took it for business. Business, all the three of you have used this money. And why should C alone repay? In that case, all the partners are jointly responsible for this liability. Got it, not got it? Jointly means what? All the partners are jointly responsible for liability. But in the agreement, specifically, C has taken an undertaking that I will take the responsibility to make the payment. Who has taken the responsibility? C, in the agreement has specifically said that if firm does not pay the money, I will take the responsibility to make the payment up till now. This is called as severally liable. C is severally liable means what? C is individually liable to make the payment. In that case, you cannot recover the money from ABC. See, first, obviously, we'll try to recover money from ABC. But if A and B says get lost, I will not pay up till now, banker will catch whose neck? Catch hold of whose neck? C's neck. Because in this agreement, C has given exclusive commitment that if the firm does not pay the money, I will make the payment. Like that, guarantee is being given by C. All of you know what happened to Vijay Mallya case? Vijay Mallya flee from India. Where? London, UK. Did he take the loan? Did he take the loan? He took the loan on behalf of Kingfisher Airlines. He took the loan on behalf of Kingfisher Airlines. So Kingfisher Airlines took loan from the banker. Kingfisher Airlines took loan from the banker. In that process, there was an agreement signed between Kingfisher Airlines and bank. In that, Vijay Mallya came as a guarantor. If the airlines does not pay the money, I will make the payment. Like that, he gave a guarantee because bank has got a process that somebody has to become a guarantor. For example, tomorrow if you take loan up Nina, education loan, your parents will become your guarantor. Without that, they will not give loan. Means what? Tomorrow, if you do not repay the loan, then the loan will be recovered from your parents. Like that, Vijay Mallya gave us a guarantee for the bank loan. So Kingfisher Airlines went into loss. They didn't get adequate support from so and so people, so airline went into loss. When the airlines is going into loss, where do they have the cash flow to repay the loan? They didn't have the cash flow to repay loan. And companies is limited liability partnership. So we could not attack the shareholders also. Eventually, bank caught of whose hold, they caught the neck of Vijay Mallya telling that, look, boss, you guaranteed. Now you have to pay the money. So they asked Vijay Mallya. Vijay Mallya said, I will not pay the money. He fled the country. Correct? No? So in that case, was all the shareholders or all the partners jointly liable for this loan? No. The exclusive liability was on the head of Vijay Mallya. So that is called as individual liability or severally liable. Got it, not got it? The word severally means what? Individually. So here, what they've told us, the unlimited liability means it's a process where the partners are liable for the firms either individually, means severally, or jointly with the other partners. Okay, not okay? Any difficulty in this? Let me know. Any difficulty in this? Please let me know. Till this clear? Can I go to next point? Okay. Last point, with this we'll wind up. Mutual agency. Mutual agency. Very, very important. Of all the 6 points that we have discussed, the first point is very important. Fourth point, what we're going to discuss now, is very important. And sixth point is very important. Out of 6 points, 3 points are super duper important from the board examination point of view. If they want to ask question from this chapter, from this characteristics point, confirm question will come from either of these 3 points. Confirm question. MCQ only will come. If they ask, they'll ask MCQ. So focus on this point very clearly. Partners are principal and also agent of each other. Now, listen to me very carefully. A, B, C are 3 partners. Tell me one thing. When A, B, and C are operating business, can I say each one will take one responsibility? A will take the responsibility of selling the product. B will be taking the responsibility of marketing or doing some other activity. C will take the responsibility of, managing accounts, finances, this, that. So all of them will segregate their roles in the business. Yes or no? Now, A is responsible, let's suppose, A is responsible for purchase of goods. What is the responsibility of A? Purchasing of goods. He has purchased goods worth 1 lakh rupees. He has purchased goods worth 1 lakh rupees on credit. Now, firm does not pay this 1 lakh. Firm does not pay this 1 lakh to the creditor. Now, creditor will ask whom now? Creditor will come and tell that, look boss, based on our relationship that we shared, since you promised that we'll pay the money on time, I give you the goods on credit. Now, the firm is saying, I'll not pay the money. So now this creditor will catch hold of whom? A. What happened? Sailesh is here, no? Yeah, Sailesh is here.
Yes, sir.
Sorry, I got 1 second. Now, A is a person responsible for making the purchase on behalf of the firm. He has purchased goods worth 1 lakh rupees on credit. Now it is time for making the payment to the creditor. Can B and C say that since A has made the purchase, A, you will make the payment, firm will not make the payment like that? Can B and C say? Can B and C say, get lost, will not make the payment? A, you make the payment. Can B and C ditch them? No. Why? Because the Indian Partnership Act 1932 says that A, who has done this job, he will be called as agent. And remaining 3 partners will be called as principal. He'll be called as principal, he'll be called as principal, he'll be called as principal. Whatever agent does will have a binding effect on all the 3 principal. So this 1 lakh worth of goods, what is purchased, neither A can say I will not pay, nor B can say I will not pay, nor C can say I will not pay. All the three persons are responsible towards this liability. Got it? Not got it? So here A has done the activity. A has done the activity. So A will be called as agent, and A, including A and other partners, will be called as principal. So whatever activity is done by agent will have a binding effect on the principal. Got it? Not got it? I gave an example where ABC were three partners and C took the bank loan of 20 lakh rupees, and the liability is a joint liability. Can A and B later say that no, since C has taken the loan, only C has to pay? Can A and B say no? Because C here has taken the loan means he will be called as agent. Agent means work. Agent means doer. Doer of the work in any business is called as agent. And whatever agent does, it has got a binding effect on the principals. Who are the principal? All the three are principal. What is the meaning of principal? Bearer. What is the meaning of bearer? Whatever doer does, the consequences of that will be borne by P, that is A, B, C, principal. All the three will bear it. Okay, not okay. This is called as the concept of mutual agency. It is called as the concept of mutual agency. Mutual agency means that a partner is an agent of other partners. In my first example of ABC, A purchased the goods on credit. In this, who is agent? ABC, A purchased the goods. Say A has encountered a liability for the firm. Who is agent here? A is agent. Who's principal? A, B, C. All the three are principal. Mutual agency means that a partner is an agent of the other partners because other partners are bound to act, so bound by his act. For example, Om, Shiv, Hari are three partners. Hari enters into agreement with Param for purchase of goods. In that case, Om and Shiv are bound by Hari's act. So they can't say, since Hari has purchased the good, Om and Shiv will not pay, like that. They can't say. So Om and Shiv here becomes the principal and they have a binding effect of Hari. So Hari is an agent here. Okay, not okay. The principle of mutual agency comes from the definition of partnership as given in the Partnership Act. What they said, business may be carried on by all the partners or any one of them acting for all. So here, out of Om, Shiv and Hari, purchasing of the goods, is it business or not? Purchasing of goods, is it a business or not? Yes, it is a part of my business activity. So it is not necessary that if Hari is purchasing goods, all the three partners has to agree for it. It is not necessary. Please understand, in business, I will be in one place, you will be in another place. We can't always go to all the places together for buying everything. In a business, you will look after some activity, I will take care of some activity. Yes or no? For example, can you please tell me, in a business, there are how many departments? In a business, there are how many departments? So there's something called as marketing department. Okay. Then there's something called as sales department. Then there's something called as production department. There's something called as purchase department. There'll be something called as accounts and finance department. There'll be something called as HR department. There'll be something called as tech department. Purida. Depending on what type of business you run, you'll have multiple departments. What is the job of marketing department? They have to market the product or services in the company and generate lead. They have to generate the lead. Then this lead is passed on to the sales department. Now sales department will take efforts to convert that lead into business. Production department will take care of manufacturing. Purchase department will take care of the purchasing of the raw material or finished goods. Accounts and finance department will take care of managing money, doing accounts. HR department takes care of recruitment. If I want a staff, I'll tell HR department, send me 2 staff. Means what? He will take interview and appoint 2 staffs. Technical department will take care of my software requirements, my website requirements. They will take care of. Purida, tell me one thing. There are 3 partners, X, Y, Z. Can all the 3 do, or can all the 3 take care of all the departments? No. So they will bifurcate the responsibility. So we will say that X, you take care of marketing and sales department. We say that Y, you take care of production and purchase department. Z, you take care of accounts, finance, HR and technical department. Correct? Now, during this work process, if there is any decision has to be done in this department, means who will take the decision? Z. obviously we will consult X and Y, but ultimate decision is done by whom? Z will take care of the decision. In that case, can X and Y say, no, Z, since you have done the decision, you have to take care of the liability. We will not take care of liability. Can they say? No. Why? Because if Z is doing any activity, he's doing the activity on behalf of the firm. So he's called as agent. And whatever work agent does, it has got a binding effect on the remaining two principals. So remaining two principals cannot say that it is not my responsibility. I am not linked to this. You cannot make such statements. You also are equally responsible like Z. Got it? Not got it? The relation let me frame it, then you write it, okay? In case if I make any mistakes, no? So let's wait. The relation between the partners in partnership firm is that of a principal and agent. Tell me, people, what is the relationship between me and Anita, ma'am? Husband-wife relationship. What is the relationship between me and you? Student-teacher relationship. Like that, what is the relationship between partners in the partnership firm? It is that of a principal and agent. Got it? Not got it? Please make a note. The relationship between the partners in partnership firm is that of principal and agent. The relationship between the partners in the partnership firm is that of principal and agent. Any problem? Wherein business can be carried on by all the partners XYZ, or any one of them can act on behalf of the other partners. Got it? Not got it? Got it? Not got it? So if Z is taking some decisions with regard to these three departments, which means he is acting on behalf of the other two partners. So decision of Z is equal to decision of X, Y, and Z. Got it? Not got it? Okay, this is one concept. One more concept is that sometimes it so happens that X, Y, Z are three partners. X will invest money, but not manage the business. Y will invest money, but will not manage the business. Z will invest the money and manage the business. The person who is managing the business is called as active partner. Have you come across this term somewhere? Where? Business studies. Very good. And the other two partners who do not do business, they are called as sleeping partner. They are called as sleeping partner. So here it means what? Partnership. We've come to the first page. What are they saying? Partnership is a relation between person who have agreed to share the profit of the business, and this business is carried on by all of them. XYZ, all of them are working together. Means all the three are active partners, or any one of them acting for all. In our example, who is acting for the other partners? Z. Z is working on behalf of X and Y. So Z is working on behalf of the other two partners. That is what is the meaning of this line, which I said I'll explain in the next class. And today I've explained it. In this, do you have any doubts? Online people, do you have any doubts? Okay. Now, with regard to liability, there is one point pending. Can I explain that and wind up today's session? You come back to your page number 1. Who said no? No, kaun bola? As well, listen. Now, anyways, come back to your first page. First point. There's one small point here. Partnership from the legal viewpoint is not a separate legal entity from its partner. Now, have you all studied 11th properly? Okay. In 11th, we came across one topic called as accounting entity concept, or it is also called as business entity concept. Can someone tell me what does this mean? Why was that so? Why did this concept come into picture first? Very good. Super. Now, what happened is, we saw in the olden period when this concept was not there, no, what people did is, whatever expenses you incurred, no, whether in business or in my personal life, imagine Fortune's Fund Learning Academy, FFLA, is a sole proprietorship concern. When this concept was not there in the past, no, I'm talking about before 1949. When this concept was not there, what I did, I mean, I was not born then, just assume. Before that, what I used to do is, in FFLA business, I used to record my personal expenses also, because the sole proprietorship concern, no, means what? I and business both are same. So in the business expenditure, we started adding the personal expenditure also. If I do that, what will happen? The profits will reduce. If profit reduces, the tax that you pay to government also will reduce. So government said that, look, boss, in the business, you are earning business income. To earn this business income, what are you spending? Business expenditure. That alone you should take to calculate the profit. You can't bring into picture personal expenses. That we will not allow. Hence, they came out with a concept called as business entity concept, which says that owner is different from the business. So when you record the transaction in the books of accounts, you have to record from whose viewpoint? Business viewpoint, not from the personal viewpoint. Got it? Not got it? Okay. This concept was given by whom, people? This concept is given by accounts. Ana, law does not agree this. Law says that do hell with your business entity concept. Do hell with your accounting entity concept. As per my viewpoint, legal viewpoint, you both are one. You both are one. What does it mean? If FFLA has taken any loan, if FFLA does not pay the money, we will attack the assets of the partner, of the owner, because it is unlimited liability partnership. Got it? Not got it? So, partnership from legal viewpoint. Which viewpoint? Legal viewpoint is not a separate legal entity from its partner. Means what? If the firm's debt are not paid by the firm's asset, then it will be payable from personal assets of the partner. Got it? Not got it? Read the line one more time properly. Once again, ma'am. Since firm's debt are payable from personal assets of the partner, if the firm is unable to pay the liabilities, the firm is unable to repay the liabilities from if the firm is unable to repay the liability from firm's asset, then such liability will be paid from the personal asset of the partners. However, they are separate. They means what? Owner is separate, business is separate. From whose point of view? Accounting viewpoint, both are separate, because transaction recorded in the books of the firm is from firm's point of view, not from owner's point of view. So owner's ka transaction record in owner's books of account, and firm's ka transaction record in the firm's books of accounts. Who says that? Business entity concept talks about accounting viewpoint. But when you come for legal viewpoint, law says in case of sole proprietorship business and partnership business, you have unlimited liability. Owners are severally liable. Owners are jointly and severally liable. So if the firm asset is not sufficient to pay the firm liability, then for the remaining liability, I will attack the personal assets of the partners or owners. Which personal assets? Gross asset or net assets? Net asset I will attack. Got it? Not got it? Now, partners are separate from firm from accounting viewpoint, but are not separate from legal viewpoint. Partnership agreement can be written or oral. So what they have done in T.S. Garwal book is that whatever points they're trying to explain, no, besides that, they've given a small summary, which is very good for your quick recap. Got it? Not got it? Any difficulty? Okay. Actually, we should have completed 2 more points today, which was rights of partner also we should have completed, and partnership deed also we should have completed. Actually, in the last year, both of these concepts were done in the second class. But this time we took little bit extra because the points here were a little bit more elaborated than last year. If you take last year's books, no, these many points were not there. Somewhere, points here and there were compromised. But here they have incorporated more points. Hence, I had to take more time to explain it. Got it? Not got it? Okay. So we'll spend one more class. Again, we'll try to understand what is partnership deed ka content and rights of partnership. 3 classes. From 4th class onwards, we will actually start doing the practical question. If not 4th, maximum 5th class onwards, we'll start practically doing the question. Got it? Not got it? Okay. Any discomfort so far? Okay, I have a question to ask to all of you. This, whatever I explained, do you think it was required, or do you think I should have just given it as homework and gone to the practical question? Required. All of you agree wholeheartedly? Because high chances question will come from this segment. If I don't explain you what is the logic behind it, if an MCQ question is asked in a twisted manner, how will you know to answer it? So please tell me, did I teach anything from CA point of view? I only explained what is given in your textbook. In textbook, they gave sentence. I explained it all along. Explanation of this, does it mean that I'm teaching you CA foundation? No. And I've been very clearly in my context, this is something which is going to come in CA foundation. So we'll learn it later. What is applicable now in 12th? That much only I'll discuss now. So I'm very clear. So as you also be very clear that I will not teach anything which is above and beyond your syllabus. What is applicable for you, that alone I will teach. Okay, not okay. If anywhere you feel that my explanation is insufficient, immediately let me know. I will put some examples in different perspective and make you understand. The ultimate goal is that when you step out of this room today, you should have a clear mindset that what have we learned today. There should be no confusions. So till the last step of your confusion, I'll be there to support you. Okay, not okay. Is that deal clear? Online people, is the deal clear? Fantastic. So on that good note, we'll wind up today's session, people. I'll see you all in the next class, which is on Friday, 6:45 p.m. sharp. Until then, bye-bye. See you. Take care. Thank you so much.